Okay, traders, welcome to today's webinar event. We're just going to give everybody a few minutes to kind of come in here and get started. As always, we do appreciate you guys coming in here at the top of the hour. We've got a very special presentation for you guys today. So as you guys are kind of signing in and getting organized, we're going to give the COT team a few minutes to kind of get organized here and prepped, and we're ready to go here in just a few minutes. And so thank you guys for being here. So you know, we'll just give you guys a few minutes, and then we're going to start the event here in about 2 to 3 minutes. So just kind of come in here. Before I go any further, guys, can you guys give me a quick test of picture and sound? Can you hear my voice and see the screen? Just type Y in the chat box if you guys can. That'd be much appreciated. Mark says yes, perfect, and everything's good. Sally, hey, welcome, guys. Excellent. Donna, perfect. Amar, excellent. Okay, perfect. So we've got audio, we got video, we're rocking and rolling. So that's fantastic, guys. We're gonna get started here in just a moment. So just give us a second. We're gonna give everybody a moment to come in. All right, traders, welcome to today's webinar event. My name is Sean Kozak. I am your host with NeuroStreet Trading Academy. And we've got a very special presentation today. We've got Balian and Thomas from COTbase joining us today for a brand new product launch on their day trading commitment to trader software. Now, I'm really excited about today's event because, as you guys know, we develop a lot of products and we bring a lot of indicators and systems to the community. But when they kind of approached me with what they've done here, I was just kind of blown away. And I'm super excited because we ultimately work with COTbase in the past with their commitment to traders reports and their fundamental research that they've done. They're very good at the commitment to traders. They're probably the pillar in the space. And one of the reasons we like to align ourselves with the organization is because they actually work with a lot of institutional clients as well. They've got a lot of traders that use their software for many different reasons. And for those of you that don't know what the commitment to traders is, I'm sure the guys here will definitely give you a breakdown once they get into their presentation. Now, as a quick groundkeeping rule, I normally like to just start the webinar off by saying a few things. First and foremost, we are recording the event. Second of all, if you have questions, just type them in the chat box, and when we're presenting, we're not going to answer the questions. We're going to reserve time at the end of the webinar to go over the questions. So if you write something in the chat box and we don't respond right away, rest assured we're not ignoring you. We're simply just staying on topic so we can get through the event in a timely fashion. If you can't stay for the entire webinar, we will send you the recording plus any special links or discounts. And what we've done is we've organized a special launch discount to be able to debut the release of their new COT systems. And I just can't stress enough, guys, how excited I am about this event because I haven't been talking about it too much. We started showcasing it in the webinars in the classrooms the last couple of weeks a little bit. But what's really neat about this is just the signals that it's providing are just outrageous. So, and I'm not just saying that to pump the software. I'm saying that because, like, I've got some examples today that are just going to blow your mind. So I'm super excited about that. I'm just going to turn it over here. We do need to cover a quick disclaimer before we get started. There are risks in the business, and you want to make sure that you understand those risks. NeuroStreet and COT are not responsible for any of your trades. We're not brokers or CTAs. We're developers, educators, and we're running businesses in the financial sector, but we're not here to have an outcome on your business. So we can definitely get in touch with legal if you have questions on the disclaimers, but they are required by law for us to put them in here. Okay, so I'm just going to mute my mic. I'm going to come back on during the demonstration because I've got some examples I want to show you. And then at the end of the event, after we present the special offer and everything that we're doing today, I'm going to spend some extra time setting up some multi-time frame stuff that the guys wanted me to showcase as well, so that we can show you guys some really cool stuff with multi-time frame analysis. So rest assured, guys, we're here. I'll answer questions if I see them, but I'll let the guys take it away. Take it away, guys.
Okay, thanks, Sean. So it's Thomas and Balian here. We're just going to give you a short introduction. For any of you who are see us first, I just want to tell you who we are. We are COTbase. Two guys basically prepared some COT analysis in Excel more than 10 years ago. Of course, it was a bit slower, maybe not just a bit, but very slow compared to what the system can do today. So eventually we hired a programmer and created a system that we actually put on the web. and eventually decided that we'll share the research with others, and we named it COTbase. So that's the short story behind us. Here you can see an example of an early Excel sheet on how we did the analysis. And if you check COTbase.com, you'll see how the system has developed. But today we're here to launch our new indicator, the COTbase iCOT Indicator. And on this slide, I just want to briefly show you the main differences so you really understand what this is. So first off, the COT analysis, the basics, of course, commitments of traders. This is the data that CFTC, the Commodity Futures Trading Commission, publishes on a weekly basis. And it basically breaks down the open interest into trader categories. And these are commercials and speculators. And I know you can see we've got two kind of speculators, but the reason I said speculators is because in our iCOT indicator, we just differentiate between commercials and speculators because these are the main difference between traders. They have different purposes on the futures markets. So iCOT stands for Intraday Commitments of Traders. So I think if you've been doing COT analysis in the past, you know this is mainly a medium to long-term indicator. So this is a weekly data. It's not something you can really use on a very short time frame. And we figured out a way to bring it down into the shortest time period possible. I'd like to highlight that it is not the breakdown of open interest, and it is not coming from CFTC. So it's calculated based on our own data, and it does not come from CFTC. We have found basically that this is possibly the closest we could get to a realistic estimation of the fundamental forces that drive markets. And on this next slide, you will see what you get if you install our iCOT indicator on Ninja. And the example in front of you now is the gold market, and you can see 1 minute candles here, and of course a lot of different signs. So let's start off with the first obvious charts. Here in the bottom, you can see charts that are very, very similar to the commitments of traders charts that we have at COTbase. But as I said, these are 1 minute candles. So right away you found that basically we can go down into 1 minute time frame, and you are actually seeing a sort of a commitment of traders data, but an intraday based on our own data and historical analysis. Of course, on our next slide, I'll explain to you what these different signals mean, okay? So the two main trader categories, speculators, still in the green color, and the commercials in red color, okay? And again, we are mainly focusing on extreme signals. So let's talk about speculators first. We indicate speculators extremes by switching the color of the bar, the candle, to blue. So whenever you see a candle bar, you know that it's a speculator's extreme. And if we find a commercial's extreme, you're going to see that by a yellow diamond, either above the candle, if it's a short signal, or a sell signal, or a diamond below the candle, if it's a buy signal. Now, of course, if we have the two signals at the same time, those can be considered pretty strong signals when we've got not just the commercials at an extreme, but also speculators at an extreme, okay? So starting off from the left side here, we have some nice buy signals, not only speculators, but commercials indicating a buy signal. And that's when we get this vertical green line, okay? So whenever we have the commercials and speculators at an extreme, you can be sure that the system will indicate that visually well, so you see that there's something happening in the market. If there's a sell signal, the opposite happens. We get a red vertical line indicating that there's a very strong signal that the market is going to change its direction. We also have a balance line. Now, I'm not going to go very deep into how we calculate that because it's sort of a moving average, but basically it gives you the the difference between commercials and speculators. And if that balance line shifts in the right direction, it gives a significant support for our signal. And when everything is combined, that's basically the best scenario. And you can see some very neat examples for that when the market gave us these signals. So here on this slide, you see summarizing what I just talked about in detail. I'd like to remind you what Sean just said. You're going to receive this in video format, but also this presentation will be available on our website for you to download. Just a reminder, so we are differentiating between commercial type participants and speculators. And the main difference is commercials are generally the ones finding signal values. Speculators are trend followers, the main difference, I should say. Okay, just a brief explanation on our multi-time frame confluences. This is something very, very unique, and I would suggest anybody using the iCOT indicator to check this out. So this is when we have the chart on top, but underneath the chart, we don't just show you one time frame, but we show you multiple time frames. So in this case, we're talking about the Euro-USD pair. On top, we have the 30-second chart, and underneath, we have 1 minute, 2 minute, 3 minute, and 4 minute iCOT indicators. And if we have multiple time frames and we receive signals on all of them or more of them, of course, the signal becomes a much stronger signal. So that's something you should check out and use to take advantage of once installing this iCOT indicator on Ninja. And I think this would be a very brief introduction. Sean, you said that we go into talking about the COT, the basic COT analysis. Of course, it's possible. I would now give you the chance to show some live examples. Of course, we offer all the literature and videos of the basics of COT analysis. I thought, and I believe this presentation's main focus would be introducing this new intraday COT. Sure. So our attention is on that. But of course, anybody who is new to the basics of commitments of traders, just by going to COTbase.com, we've got some very, very useful pages, the on COT in written format. And on our help page, you will find some tutorial videos explaining to you what the commitments of traders report is all about, the basics, and of course, the usage of the analysis tool. So thanks, Sean, for the opportunity. I'll give you the mic.
Hey guys, thanks. So as you guys know, I'll just kind of take the screen now and just kind of share a few things with everybody, because the whole purpose of today's event is I really want to, I'm going to open up the chat box here, guys, so just give me 1 second, and we're going to go in and we're going to bring this over. First and foremost, let me just kind of address a few things here, because, you know, we've got a lot of people in here today, so I just want to make sure we've got a good audience and their attention. So what I'm going to do is I'm going to talk a little bit about what COT did and why we started working with them, and then I want to go into the demonstration. The Commitment of Traders is a fundamental report that is released every week based off institutional sentiment. And it's released on the Friday of the week, and it normally leads into the decisions that are about ready to basically go in and help us as retail traders get an understanding of what the institutions are doing moving forward. Can you guys give me a yes that you've heard of the COT to some extent? Give me a yes if you've kind of got an understanding of what COT analysis is, and just give me a no if you don't. Just put a no if you've never heard about it or you've never understood it, or if you're completely new to COT, because that'll give me a better understanding of the basics versus the people that have got an understanding, okay? So when the team over at COT contacted me, obviously we're a trading school, and we've developed a lot of indicators. And, as you know, we normally don't like to showcase other vendor products because we've got an in-house development team and we could build our own. However, when they came to me and they said, Sean, we've got something that I think you might be interested in. And I actually opened my eyes and I seen what they were doing, and I said, you know what, you're absolutely right. I want to explain a little bit about how we started working together so you understand why this is important. The COT is a fundamental tool okay? The COT is a fundamental tool for a technical environment. So if you think about futures, Forex, stocks, options, the stock market is very fundamental and technical, meaning earnings, gaps, performance, FDA approvals, these types of stuff. Futures, unfortunately, doesn't have that. So in futures and in Forex, it's very technically weighted, especially in Forex when you don't have the volume analysis like you do in futures. And with futures, it's very institutionally traded because futures are an institutional hedge market. So all the retail day traders that come into futures, they can't approach it from a fundamental perspective. Until the COT reports are produced, it gives everybody more of a fundamental analysis breakdown of what the institutions are likely doing. So when we started working with COTbase, what they did was they basically launched this. Now, this is their dashboard. This is their fundamental dashboard. And what we would normally do in our classrooms in the beginning of the week is we would come in and I would sort by percentage change. And basically what this would do is this would open up and I'd be able to see anything over 20% is significant. So all these ones up here are the ones that are moving and grooving. And anything underneath 20%, I'm really not too interested in. And that's really kind of the more of an understanding based on fundamentals. It means they're selling the hell out of Bitcoin and, they're really moving money into bonds and all that fun stuff, right? So I don't want to get into this because that's what not this webinar is about. But I do want you to understand that the COT tool sets are a way for us to know what the institutions are doing across all the different asset classes. And so I basically got an email a couple of weeks ago from the guys, and they said, we've been working on something for a long time, and we've finally been able to make this available for day traders. I said, what are you talking about? And they basically said, well, we've created a signal indicator that looks at historical data from our databases off the COT stuff that they built that allows them to take this information and put it into technical indicators for retail day traders on signals. I said, so we don't normally necessarily just need to look at this. We can actually use the signals on our charts. And he said, yes. So that's exactly what I'm going to do. I'm going to show you this today. What they did was they took all of this information and they have their own way of doing it, and it's their proprietary process, and it's none of my business. But what I want to do today is I want to make it super simple for you. Whether you're trading futures, Forex, or stocks, we've now been able to take that COT concept and bring it into the retail signal environment. And when we talk about signals, I've built a lot of software, guys. A lot of you guys have bought it. We've developed a lot of signal systems and a lot of other types of tools. Creating signals that are very reliable is a very, very difficult process because signals change, the market changes. When I started seeing this, I was like, wow, man, like these are really spot on, and it makes a lot of sense because the COT concept comes more from, I can't say fundamental basis because we're not bridging this right from COT. It's more off technical patterns from the COT, if I'm not mistaken, guys. But the point of the matter is that it's using their fundamental process of the COT analysis technically, and they've now driven it on signal. So I'm going to pull up crude oil on a 5-minute chart here. We're going to take a look at crude oil for a second, okay? Now, I don't know about you, but it's really easy for me to see these stars. I like to call them stars because they look like a star to me, these stars here. And you can see the stars down here. Now, there wasn't a signal down there, but there was a star. There was a star here as well, okay? There's a star here as well. This is significant information because it's based off of the COT fundamental analysis that is driven from their technical database, essentially. And so if we just take a look at these signals on crude oil, like let's just look at this one over here. Like this one right here, we got a signal up here. It consolidated a bit for a counter trend trade. We got another one here, huge drop. You can see the bars up here, big drop. Then we got a double signal here, massive drop. This one here, counter trend signal there, drop. The big thing that a lot of traders are going to look at is these combined signals. These combined signals are they just blow me away, man. Like they're just spot on. There's a big correlation to a lot of follow through from these. And when I started looking at these, I started saying, it makes a lot of sense because you're using COT data. right? You're using stuff that's weighted from COT analysis, which is fundamental perspectives. Now, it's not the COT fundamentals on a macro level. They've got their proprietary process of bringing it down into a micro level for retail day traders. And we can get down as granular. This is a 5-minute chart. If you want to go to a 1 minute, we can go to a 1 minute. Get it granular as you want, but you can see as prices are driving up, this is essentially, more granular. If you're a scalper, right, you can see that depending on how you want to look at this, but you can see that these areas, these diamonds are also trades. And then basically these double signals are double trades, right? Now, it depends on if you're using 5 minutes, 3 minutes, you want to go to a 3-minute chart, you go to 3 minute, you go to a 5-minute chart, whatever your time frame is. But let's go and take a look at some of these other markets. Let's go look at the S&P today. Let's go take a look at the S&P. Now, what you're seeing down at the bottom, we just had a really big short on the S&P. Now, what you're seeing down at the bottom is the actual COT analysis. And it's basically speculators, large players, small players, medium players. If I'm not mistaken, guys, maybe you can correct me on that. But the key here is being able to understand that this type of information, it was never ever available on a day trading basis like this. This was only ever based off of fundamentals on a higher time frame basis. So they've been able to come in and take this and be able to identify this with, like, look at these signals. Like, these are crazy trades. And so, look at this, like right at the top, right? Like, and now for me, the way I like to trade these, I would actually trade them on a break of price. So if I got a signal, I would take the low of the breakdown, right? So that way I can understand price is truly breaking these, right? But it really depends on how you choose to enter your trades. It's your call, but you can see these levels, okay? Now let's go in and take a look at a different market. Let's go look at some Forex trades for a second, right? Let's go take a look at the pound dollar. What's going on here? Take a look at these. Like, look at these trades on the bottom. Like, there's user documentation that breaks this down. There's demonstrations and there's video training and there's manuals that will break this. But the key here is that, these are signals. These are really powerful signals because what it's doing is it's combining all the information together for really, really, really strong trades. Now, I don't know about you guys, but the key here is, like, we could go up into bigger time frames and start taking a look at like 15-minute charts and see what's happening on the big stuff, right? Like, we've got two really big trades on the 15-minute time frames down here at the lows, right? These were really big trades, right? These ones here. We could go to a couple different markets and take a look at them. Let's take a look at the Aussie dollar, right? Let's take a look at the Aussie dollar is doing on the 15-minute. These might be too big on this time. I don't have enough time frame. Let's go back to the 5-minute. Right, the Aussie dollar's got a couple shorts in here. This, let's take a look. Not a lot on the Aussie dollar. There it is. There's a big one down here. I don't have the graphic set up for the dark green, but you see down here caught the low pretty nicely. Right now, if you're a stock trader, okay, let's go take a look at the spiders. We can look at silver. Let's take a look at silver. Now, stocks have big gaps, so sometimes you're going to have the gap factor coming in here, but you can see they caught these on the lows here, right? And the concept of this is understanding what the signals are doing, right? The signals are signaling institutional involvement. Where you want to look at gold? Yeah, why don't we do this? Let's do a show and tell right now. You guys put in a market and we'll go look at it. Market and time frame. I think that's the best way to do that. Tesla. Thomas wants to look at Tesla. Maybe he's a bag holder. Tesla, 5-minute chart. Okay, perfect. Let's take a look at it. Excellent. So there was a really clean buy over here at 11:30 on the 6th. This is a 5-minute chart, guys. Right there. This one right here. Short coming in, boom. Long, boom. Those are big trades. Those are decent trades. Okay, give me another one, guys. We're gonna go over here and take a look at a couple other ones. Give me other markets. I'm gonna leave this open for you guys. We're gonna call this an Ask Me Anything market show and tell on signals, because that way I am, let's go to the, so we got the pound dollar. Gio wants the pound dollar. Let's go to the pound dollar. Okay, let's go to the pound dollar. Okay, What this tells me is that they're really selling into these trades. I personally, the way I like to trade, and this is me, and this is something you guys can take for a grain of salt, okay? Essentially, I would actually wait for a close below the lows on the signal bar. So the way I look at this, I'm on a 5-minute chart. I would actually trigger the entry on the close below the low. So I would actually take the signal with my stop above the high and then price breaking down. This one didn't actually break down. This one actually just kept trading straight up. This one up here, on the other hand, this one never broke down until here. So I would actually be getting into this trade here, and this one would probably give me a little bit of heat on that one, but that's just reality. Trading is always about that. Right, let's take a look at this one. I would take the trade on the close below the lows. So as soon as price broke below the lows down here, I would actually trigger this trade, and I would go in with my stop above the highs, right? And depending on how much you took out of that trade, there's a trade right there on a 5-minute chart, right? And let's go over here. So I would actually take the trigger on a break above the highs. Let's go down here, take a look at this one. Let's go take a look at these ones here. I would take the trade on a break above the highs. So the signals are here. I would take the trade on the break above the highs. So I would actually get in there. My stop would here. I would have taken, maybe a little bit of a trade on that. Depending on how tight you have your stop will determine this, obviously. And you could use volatility stops or price-based stops. It really depends on how you choose to trade this. But this was the beginning of a very big rally here. Okay, let's go back over here. Same thing here. This is a great example. I would put my entry right above the high on the signal bar, boom, and I would put my stop below the lows, right? And that's just how I would trade these signals. Now, you could easily have a volatility stop with a bit more breathing room. It really depends on how you choose to take those trades. If I were to take these shorts up here, let's go take a look at these ones over here on the left-hand side. Okay. To me, this is 100% signal software. So like it is nothing but signals. Like this is exactly what this software is designed to do. It's designed to produce trading opportunities for exits as well. Like you could be long from a pullback and get out here, right? That's the key here. And there's many ways to take these signals. Like these are trade signals too here, eh, guys? These diamonds, take a break above the highs, stop below the lows. Okay, I could take the short, break down here. Okay, I really like these in directional markets myself. Like if I'm in a directional market, let me explain something. If I'm trading an uptrend, higher high in price, pullback, that to me is a sexy trade, even though it may not be, the double signal, right? It's still a sexy signal because you're trading with the direction of the market. Okay, this is a counter trend signal, but it's a double signal. Okay, and so the concept here is understanding how you could take these from both sides of the play. Let's see if we get a downtrend here. Let's wait for it. Like you could see some of these trades here, guys, are not producing double signals, but they're also producing trades. Like we're in an uptrend, and take a look at this trade right here. That's a trade. These diamonds are trades, guys. Okay, works with any time frame. Let me ask that question. Maybe guys, Balin or Thomas, can you answer the question? Does it work on any time frame and any bar type?
Sorry. Okay, here I am. Yes, yeah. It does. It does. Any time frame, any bar.
Any bar type. So if I want to load a range chart or if I want to load a volume chart and like that, it'll work?
It was designed on minute bars actually, or time-based charts. But it can work on renko as well, absolutely.
Yeah.
And this kind of range bars as well, yes.
Yeah, so Terry's asking a great question. Let's go look at gold for a second on a 5-minute, and then we'll go into some of these other questions here, okay? So a couple things here. I see that we're in an uptrend here, real quickly. So here's the thing. You're either a trend trader or you're a reversal trader, right? You're one or the other, or you're both. But if, let's say you're a trend trader, okay? As a trend trader, I would want to look for the diamonds on the upside. That's me. Okay? And if you're a reversal trader, I would want to time these massive signals with auction levels. Like I would want to see these confluence levels with profiles or key areas of interest, round dollar price levels, right? Coming up to key areas of importance. You can take a look. If I was like, even though I've got the double signals on here, if I'm a trend trader, take a look at these last two trend trades that just kicked in on gold. This was a seriously big trade right here. with very, very, very little heat, right? It's not even producing a double signal. The signal for me would be a break of this level right here, right at the break of the price levels on the low, stop below the lows. Why? Because this is a diamond signal in a directional market. It's an uptrending market. Massive trade. Massive trades. Like, I was just blown away by it. I was like, you know, I designed a lot of software and these guys nailed it. These guys nailed it. And I was like, this is fantastic, because you could trade it either directional or counter direction. And what I like about it is because in futures, you don't have the added benefit like the stock market for fundamentals. We know there's inventories. We know there's other stuff going on, right? Like home sales and this. But this takes that out of the mix. It's a completely different perspective. Let's go to a different market, guys. Give me another market. BA and GILD. Gold, like, I don't know about how the micros, MNQ. Let's look at the NQ. We never looked at the NQ. Micro NQ is the same. So let's take a look here. So let's take a look at these. These are counter directional signals. So right now, as a trend trader, we didn't get any trend signals. They never did show us any type of institutional buying on the upside that met any criteria. But counter directional trades, there was, okay? There was counter directional trades here. I personally would not take in any of these trades because, well, this one here, we broke below the lows here, came down to here. I'm not a huge counter. Me personally, I would only look to time the counter trend trades on major areas of influence. That's my style. Some of you guys might scalp this for 5 ticks and be out every time, right? As a trend trader, okay, I would look at trading the direction. So we can just see the direction is up to the upside, right? Like, it's very simple to see a 5-minute trend all the way up. I'm not talking about every little minuscule trend. I'm trading the macro trend, right? So the macro trend is up. So what I'd want to do is I'd want to look at any key areas of influence where buyers stepped in here, okay? Here's one. Here's one, okay? And it just depends on how you enter and manage them, but I'm telling you, right here, this was another one. Wow, that's a big trend trade right there. Like, this is what I'm talking about. You're in the direction of the big picture moves. And this is what I was looking at. It's really easy for traders to see these really double signals and get thrown off. Like, wow, look at those red lines and these green lines. They're just really nice trades. I'm more taking a step back and thinking, okay, if I'm trying to go with the market, where's the real hidden gems? And that's these diamonds with the trends, man. Like, these diamonds with the trends are amazing. and like, I could take any market and find diamonds with a trend and I'll trade those. Give me a market, guys. Let's go find some diamonds with a trend. Brian says, does the diamond and the red-green trades print on the close of the bar? Are they seen? Amazon on a 30-minute. Thomas wants to go to Amazon on a 30-minute. Let's try Amazon on a 30-minute. Let's go here, adding some days. And you can tell I don't even know what these charts are, guys. I've never looked at them in my life. Okay. So Amazon in a 30 minutes hitting into some serious selling right now on an institutional level. You can see that Amazon on a 30-minute, this low down here, right? This was a low stop run and then popped to the upside. But it depends on how you trade these. I personally, as a trend trader, I don't see any trend trades the way I would trade it on Amazon on the 30-minute. But if we went down to, say, let's say a 15-minute, let's see. As a trend trader, there's a really sexy trade right there. Higher high, higher low, higher high, higher low, trend trade, boom. Okay, now these are swing trading time frames. These are swing trading time frames. Okay, so let's kind of go in here for a second. Let's go ahead and answer some questions because I see some pretty valuable questions. So Terry wants to know, can you explain what's going on the green and red white lines on the indicator below? Okay, on the indicator below. So let's talk about that. Thomas, Ballant, maybe you could talk a little bit about what's going on here for me. So let's open this up. Let's make this a little bit bigger. Okay, let's just talk, what's the green one?
Yeah, so the green one, they're the speculators, and the red are the commercials.
So let's talk for a second. So speculators are big money, or these are the small money?
They're big money. And commercials are, so basically, if you know the original COT data. They have the classic or so-called legacy COT data is based on three main trader categories: commercials, large speculators, and small speculators. But in our own iCOT indicator, we just differentiate between speculators as a sum and commercials. And the main difference between them is speculators are trend followers, commercials are value traders. That would be the main difference between the two category.
Right. So value traders, meaning these guys set the market, these guys follow it.
Yeah, exactly.
Yeah. So these guys are the banks guys, these guys are the prop shops.
Yep, exactly, Sean.
Yeah.
And the white line in between there, that's we call it the balance line, and it's mainly the difference between the speculators and commercials. It's sort of a moving average. It would be hard for me to explain the exact math behind it, but it shows you the balance between the two main categories over there, speculators and commercials.
Perfect. So does that make sense, guys? The green is the prop shops. The red is the big banks. Big banks set the market. Prop shops follow the herd. Give me a yes, that makes sense to you. Big money, small money. When I say small money, it's still big money. It's just smaller, right? So let's go back up here. So Mark says, couple this with market profile and trend lines and you have a killer system. Yes. Terry, we just answered your question. Okay, Brian says, does the diamond and the red-green trades print on the screen of the bar, or do they repaint, or is it on a bar close signal, or are they printing intra-bar, right? So if I'm trading on this candle right here, guys, and this candle's moving, will I see the signal as it's happening, or will it have a bar close signal only?
Okay, so it will be on the bar close, Sean.
Yeah,
okay.
On default. But if you set the indicator on price change or on calculate on every tick, then it will do the signals in during the bar.
So by default on close, but you can actually set it to your desire. Yeah.
So here's something else too, guys, and I didn't even realize this because I didn't even think of it. But if I'm not mistaken, these are chart markers, correct?
Mm-hmm. Yeah, exactly.
We can automate this software. So,
yes, you can.
we actually have the easy algo that will read these chart markers and you can automate the COT. So if you wanted to build an automated system using the COT signal system, we can automate that. So if you're using the yeah, well it is because we just built it, and what it does, it reads chart markers. So any indicator that produces a chart marker being anything in this list down here, and I believe you have a diamond on your chart.
Mm-hmm.
So it can read a diamond. And so we can actually automate this, guys. Anybody that wants to automate this, you let me know and we'll throw in an even sexier deal on the easy algo later. Just let us know. Send us an email back and we'll hook you guys up. Because we want to help the COT guys get this out and do as much with it because it's stellar, man. Like I was blown away when I seen it. Give me another market, guys. And you notice that we're kind of doing like a coffee shop webinar. This is not just a heavy push. This is like, we want to show you this because it's never been done before. I've never seen a vendor bring a COT indicator to a retail space with any merit. Like, yeah, there's the COT, but it's not like this. So NJ wants to look at the S&P. Okay, S&P on what time frame? There's the S&P at the highs right there on the 5-minute. That's today. So where was the break of the highs? So to me personally, the way I like to trade, I like to see price confirm breaks. So if price comes up here, we never made a lower low off that signal. We never broke the lows, The first candle to break the lows was right here. That would be my entry for the trigger short right here. I would take the break of the lows on that signal because I want to see price actually confirming the signal. So that's the 5-minute entry on the short. I would not get it on the first bar. I would wait for the second. And if this one never came back up, I'd take the low and the break. Now, there's many ways to trade these signals, guys. I'm just adding a little bit of my own experience to it, right? And just kind of help you guys out with that, kind of think a little bit. But look at the trend trades. Like there was one wicked trend trade. I just can't stand it. Like if I just look for these, to me, these are big swing trades. Like that's what I see. My eye looks for the hidden gem, and the hidden gem to me is the directional trade. It's very easy to see all the counter direction, right? But when you get the with direction, right? You're not fighting the herd so much. You're just going with it. And that to me is a gem. It's a hidden gem. So Terry says, do we need a separate data feed? Absolutely not. No, it works on your standard data feed. So as long as you've got data for stocks, futures, and Forex, you can access this. Yeah. Let's go in and try. I don't know for sure. I've never done this. We'll have to see here, guys. Save as iCOT. Give me 1 second here. So I'm going to just save a template here, and I'm going to load it on a different time frame. Let's try and load a range chart, or let's load an S&P on, say, a 6 range bar, and let's try it out on a range chart. Let's see what it looks like. So let's go here. Default. So the S&P on a range chart. I think, I'm not sure if I have data. Interesting, it's not loading. I'm gonna try a different market, guys. Give me a second. I'm gonna see if we can get it on a different market. So futures, to gold. Ninjas, there it is. So there's the range, okay? So there's a 10-tick range bar on gold. Let's go in here, and let's just go in and just try to pull this COT. Okay, so let's go take a look at these signals. As I mentioned, I would be a trend trader, so my trades would be here. Okay, my short would be here. That's me. That's me just sharing my own experience. You guys look at this, you might see where I see an elephant, you see a raccoon, right? But like for me, when I look at these signals, you know, they're pretty darn spot on, right? Depends if you're trading on a range bar. Look at the low here, cut this one here, look at the high here. I mean, these are pretty solid signals. Now you'll notice that this is fighting the trend all the way down. You want to know why? Because these are institutions buying into this position. This is big money. Big money bridging in, big money bridging in. They're adding, they lift. That's banks. Banks can do that. Retail traders can't. That's what these are telling us. That's what this is, letting us know what's going on, right? Then this is them calling the low, and the double signal is when they both work together, which to me is really powerful, especially at key areas of interest, right? I would never want to just trade a diamond by itself against the trend. For me, that's my preference. And if I'm going to trade a counter trend signal, I would always want a double signal. That's just what I've noticed over the time. And I'm more of a trend trader. So to me, it's more with direction, right? It works on bar types like this, guys. Yes. So what are you guys' thoughts? Give me a yes. This kind of looks pretty appealing. It's pretty intriguing. I was blown away by it. Looking at this, you align these up with supplier demand zones, fib levels, auction levels, key levels of interest. Big round numbers, you just look at key areas like this directional momentum. I was really, really excited to see this. Give me a yes that this is kind of interesting to you. Yeah, Sally says nice. Mark's, yeah, another arrow in the quiver, Terry says, yeah. Well, what we're going to do here is I'm going to open it up for some questions. Question here, guys. I want to do that multi-time frame demonstration. Why don't you guys instruct me on how to set that up while I'm doing? We'll do a show and tell with the traders on multi-time frame. So maybe if one of you guys can instruct me on that, Ballant and Thomas, we're going to go through and we're going to do a demonstration on that. So I can take this chart here.
Yeah, and you should open the data series. So right click and and then on the instrument you should select other instance of ES. So you just write in ES, yeah, and then put there, I think, like 15 minutes or something. So choose here, yeah, the 15 minutes, and then do it again and do the 3 minutes. It's okay, yeah, 3 minutes, sure. And maybe this is enough, and then or maybe more, yeah. Okay, perfect. You can do more, yeah. Actually, it would be much nicer if we put the 1 minute on the top and then go down. So this is 1 minute. So change it to 1 minute. Then the other one is 3 minutes. Yeah.
You guys watching this is a demonstration here in the
10.
flesh.
And then 5 and 10. Yeah. And then that's okay. This is okay. and then go to the indicators and apply the iCOT to all of these charts, one by one. So no, not this way, not this way. Go to the indicators menu on the top, yeah, indicator, yeah, and then put 4 more of iCOT there, yeah. Go down, yeah. One more, yeah. One more and one more, and then set up. Go to the second one on the list in the conf, yeah. That.
Change the panels.
Yeah, and then change the go up, and you will see the a little bit more up. You can see no, not there. No. Go up a little bit more and see the input series, the first, yeah. And then you should choose the 3 minute, yeah. Yeah, choose the 3 minute and okay, and yeah, and then the other one, you choose the 5 minutes and then choose the 10 minutes.
So this is how to set this up with multi-time frame confluence, guys.
Absolutely.
So if you guys are watching this is how we set this up with multi-time frame confluence, so we can get multi-time frame COT signals on alignment.
Yeah, and we are using it like this, and it shows some very beautiful confluence signals. And when the red bar, so the red stripe is getting a little bit more red, you can see that there is a confluence in like 2 or 3 time frames. And look at how it nailed the top, or the real top here in the ES. Right? You see that? These signals we really love.
Yeah, these are really big ones. When like they're really dark, it's kind of like a COT heat map. In the way I would explain this, guys, would be COT heat map. You know, that's my own little jargon term for it, but realistically, like, you know, if you just look at all of these signals and you try to look for dark colors, like the darker color stands out here. This one gave a little bit of a bounce, but this was pretty strong. This one is really strong over here.
So Sean, I see a question. It's an important question. We'll try to put a lot of emphasis on explaining. So we call it intraday COT because the way we constructed the indicator is based on COT fundamentals, but it is not a weekly data. So there was a question that from Thomas. He thought that COT is only once a week. Yes, COT data is once a week, but this is the iCOT indicator, which is based on the historical data of the market itself.
Yeah, we used to use this data to train these indicators to be able to use the intraday data as well. So we found some interesting.
So basically, in layman's term, guys, you know, so we can go from developer down to user. What we've done is they've taken historical data from the charts that was a result of the COT, and then they've built their own technical process to be able to make it so that it doesn't rely on the data itself, because the data from the COT is already influenced into the market. So we're able to take the statistical patterns from that influence and create.
Absolutely.
Yeah. Basically, so can you make chart markers only appear when the racing stripes show? I don't know. That would be a good question, Jeff. So, you know, the question is, you know, these are chart markers. Do you have it so you could change the way that the signals are set up with, like, you know, setting signals on these, or is it, I'm not sure how you have that set up. I'm sure all that's explained in the user documentation. Like, see how dark this one is, guys, on the euro? This is a really dark signal, and it dropped like crazy out of there, right? See, these ones here are red, but it's not super red, right? Like, to me, like, take a look here. This is a bigger, darker red, and they dropped it from here. Let's go to a different market and take a look at, say, the Russell. Let's go take a look at the Russell. What they do with the Russell. Okay, let's go see here on the Russell. Take a look at the dark stands out to me. That's just looking at the darks just stands right out to me. Look at that. Look at how they nailed the top on that. Yeah. So that's kind of the presentation today, guys. It wasn't meant to be some real big pitch. It was more of they did it. Like, these guys nailed the COT into retail trading. I've never seen it done before